Hey everyone, welcome into the video. In this video we're talking about ATAC Stock and what that actually forms, which is Altimar Acquisition Corporation, Rock and Dial all combining together through SPAC merger in a $1.8 billion deal coming up in the near future. It's super exciting. SPACs are all over the place again at the moment, and the stock price has leaped 10% already based on just this news alone, let alone people are now going to start digging into the investor relations and the investor analysis and presentations to find out exactly what's going on with this company. Well, guess what? I'm going to help you do that as well. If you stick around after the intro, I'm going to be delving into this presentation, delving into this company to show you exactly what's what. If you can see your way to liking this video and subscribing to the channel, that'd be absolutely amazing. And I'll see you on the flip side. Hey guys, so here we are looking at the announcement on Seeking Alpha. There we have Altimar Acquisition to combine with Rock Dial to form Blue Owl in a $1.8 billion deal. So this is a blank check company, of course, being a special purpose acquisition company. The price has jumped 10% after agreeing to combine with Rock Capital Group and Berman's Dial Capital Partners to form a brand new company which will be Blue Owl Capital, and it has over $45 billion already under its management. And this is absolutely fantastic when it comes to these companies. I love SPACs that have a product in the first place. None of these Mickey Mouse things. An actual product is fantastic and exactly what I look for. So the transaction is expected to generate 1.8 billion in gross proceeds, 275 million of Altimar's cash to be held in a trust, assuming no redemptions, and then $1.5 billion fully committed in oversubscribed common stock at $10 a share. The combined entity is expected to have a post-transaction market capitalisation of 12.5 billion, which is huge. And then Blue Owl will list on the New York Stock Exchange on the ticker, under the ticker should I say, OWL in Q1 2021. The firm's main business will focus on the two fastest growing areas of alternative asset management: direct lending, where Rock is one of the leading private credit providers, and then the upper middle market businesses backed by top tier financial sponsors, GP Capital Solutions, where Dial has been a leader since its founding. Moving it on then to the Blue Owl investor overview, which is I'm sure what you guys will be most excited about to see. Blue Owl is an absolutely fantastic company. So we can see that it is a differentiated alternative investment manager, and it is already, even though it's a SPAC, already a leader within its sector. So it has 51 billion in permanent capital lease space. Best in class for fee related earnings, highly attractive robust profit margins 67%, industry leading embedded growth profile also at 65%, scalable growth opportunity, and proven experienced leadership with a fantastic track record. And that is exactly what we're looking for when we're doing SPAC investing. It is all about the leadership experience, and for me, having a tangible product available as well. So the strategic benefits of Blue Owl is that it is a leader and provider of GP solutions in terms of capital and lending platforms. We have a quick table of contents here for highlights, business overviews and financial highlights. So here we can see that Blue Owl is a permanent provider of private market GP solutions with deep relationships to facilitate GP solutions. And you can see there is a whole plethora of companies here that already use portfolios, fund solutions and GP solutions. All these companies are already using Blue Owl facilities. It's aiming to expose an attractive segment to a securely growing industry. So as you can see here, I mean, just look at that chart. The curve is going massively upwards. You've got private equity, private debt, real estate infrastructure and natural resources, a very well diversified source of income, and you can see that it's growing nicely at a rate of 12% and has been doing so since the early 2000s to 2020. And then with this special acquisition investment, it aims to boost that revenue even further through to 2025 at a rate of about 16%. There is an attractive and compelling equity story. The innovative solutions platform primed to benefit from strong growth in private alternatives, the best in class for fee related earnings, and really good EBITDA margins as well. You can see through 2020 and 2022 revenue is expected to climb from 668 million through to 1.155 billion, and it has a strong record and is a leader within its sector as well. We're expecting superior growth and earnings relative to its peers. So Blue Owl's fee related earnings is a market leader, and then it has a leading growth profile of distributable earnings growth as well. So you can see it sitting here in the top right hand corner, almost out in a field on its own when it's compared to its peers such as Blackstone, Partners Group, Apollo, etc. Blue Owl sort of sees itself with 5 sectors. It's got its FRE centricity, DE growth, visibility of earnings growth, permanence of capital and relative margins. And when you can see that sector there highlighted, it has so much to do for itself. It is very high in all of these sectors in comparison to its peer, very well differentiated. The business is again doing exceptionally well. It already has $23.7 billion under asset management. 465 million plus is from Alrock's executives and employee capital commitments. It has an 11.8% realised investments since its inception, which is an excellent return, double-digit return obviously. And then there's 25 plus years of experience for the people and the leaders of this SPAC, which is very important when you're going down the SPAC route, because you really need to know that there's somebody in charge that knows exactly what they're doing. This company has been here before. The people leading the charge, such as Douglas Ostrover, Mark, forgive my pronunciation, Lipschultz, and Craig Parker have all been there before, and there's also loads of people in executive roles that have worked at Blackstone and Goldman Sachs. So the 23.7 billion under management already is from diversified lending, first line lending, technology lending and opportunistic lending. The majority of which is in diversified lending, which you would probably expect to see. Technology is up there as well, then first line, and then opportunistic, which is probably a little bit speculative, is down there with just 1 billion. Moving on to the capital solutions, then the size and scale of the 23.3 billion under asset management is absolutely huge. They've got extensive relationships across their asset management ecosystem. They've got long-term partners lined up to make full use of the business. And then there's Michael Rees, the founder of this one, has 18 years of experience across his senior management team. There are multiple funds within the capital solutions and the platform breakdown, should I say, as you can see in the picture and the presentation here. The company is in an extremely competitive position, again leaving the likes of other competitors, Goldman Sachs and Blackstone, in its dust with over 18 billion plus in average underlying PE firm. Now there's proven experience, stable capital, strategic partnerships. You've got the company is alignment focused and has large cap focus as well, and is a very scalable option over the longer term as well in terms of its funding. Financial highlights of this company, as you can see, the adjusted returns are in 2020 $668 million. That's not too bad at all. When you fast forward through to 2025, you can see that they're almost 3 times the revenue in just 5 years, 1.785 billion, with expenses largely remaining quite low in comparison to how much the company is going to generate. The company is going to use the capital raised from the special acquisition to really enhance and push forward its current earnings power. It's going to obviously spend it wisely, and it needs to do that because obviously money doesn't grow on trees. It needs to deliver the best value for us investors essentially. So there's a nice little bridge and graphic here for 2020 earnings that reflects the launch of the Dial 5 fund and the continued deployment of existing funds and the earnings that will be generated from said funds. And then with the fee related earnings, I don't know why I can't say that for some reason. I just keep having to look away. It's fee related earnings, but for some reason it just completely catches me out. Anyway, I digress. So you've got your organic growth here sitting at 23.8%. That is absolutely fantastic for us to see. Sitting at 47 million right at the bottom there in 2020 through to 135 million in 2025. And then moving on to the transaction summary. So we have the senior leadership of the fund here. You've got Doug Ostrover, the CEO, Mark Lipschultz, the co-president, Michael Rees, another co-president, and then Alan Kirchenbaum, sorry, I really can't say that, the CFO. All of them, if you look at the bottom there, plenty of experience in this sector and in this industry. 25, 25, 20 and 25 again. That is really what you're looking for when it comes to investing in SPACs. Then you've got a quick overview here of Altimar Acquisition Corporation. You've got the partners that they've used in the past, the previous track record, how they add value, and their experienced leadership team. They do and have done this before multiple times, so essentially this whole deal is in extremely safe hands. Then if we have a look at what the transaction summary will be here, you can see that Altimar Acquisition Corp is purchasing the interest of Blue Owl at a pre-money equity valuation of 12 billion. Blue Owl equity holders will retain 10.7 billion in equity, resulting in a pro forma ownership of 85%. The 1.4 million in cash proceeds, or 1.4 billion should I say, is to go to existing equity holders, including 350 million to certain third-party Owl Rock investors and 1.1 billion even, I can't speak today, representing a partial sale of its interests. And then you can see some extra information there and the charts over on the right hand side. The capital structure and dividend policy. Now that's really interesting to see that this company could potentially pay dividends over in the near future through 2021, 22 and 23. They see that there's a potential dividend yield of 2.7% on the horizon and a really good profit range as well through its capital structures. So in the governance summary, you've got the initial board composition is 3 independent directors, 3 Owl Rock appointed directors, 2 Dahl appointed and 1 Neuberger Berman appointed director. So there's going to be a whole culmination of experience coming to the board that are going to be in charge of this company. And then we've got a high quality portfolio that outperforms relative to its peers. So you can see where Owl Rock is highlighted there. It's doing exceptionally well when you compare it to the likes of BlackRock, Goldman Sachs in that sector as well. And then it benchmarks itself particularly well as well. So you might have to look a little bit close at this one because the writing is quite small. But you can see that Blue Owl sees itself as doing far better in terms of its compound annual growth rate being at 65% in comparison to most of the others there. It's much lower than that apart from EQT. Over the long term, its growth rate is at 32%, only beaten by EQT as well. But it has got a better profitability margin through 2020 and 2022. So the whole company, relative to the 10 other companies that are in its section, is doing really, really well and should deliver significant return to us investors. Again, another benchmark that you can use, it is going to focus on the higher growth that it possibly can, and that is going to be exceptional going forward, and you can see in just the numbers here, the medians that they are talking about are absolutely awesome. That brings us to an end of the presentation there. It would have been nice if they included a thank you very much slide, but hey, that's all we can talk about here today. So I'm very interested in this company. It's only just been announced. We've got to do so much research to look into this, but from what I've seen so far, having a good dig into this presentation, it is really interesting. Having had a good look through their presentation there, I do like what I see. They are a industry leader in exactly what they do. They're already a business that is set up and generating significant revenue. They have a product, they have a service to provide. So this money from the special purpose acquisition going into it is going to be used purely for expansion, and that is great, and it's going to lead to significant value generation, and that's exactly what you're looking for if you're in this for more than just riding the stock value up as it doubles with the initial excitement. If you're in this for the long term, you want to see that there's a product available and a product that's going to do particularly well over the long term. Now this to me makes Blue Owl a prime target for investment from not just obviously retail investors like ourselves, but institutions as well. It already has a very good track record of gaining interest and investment from a whole plethora of industrial investing companies. So I'm really interested in this one. I'm going to be opening a small position, I think, as a bare minimum, and then wait out to see what 2021 brings when the merger actually goes through. Thank you very much for watching, guys. It's been absolutely awesome to bring you this video. If you could see your way to smashing that like button, that would be absolutely fantastic, and consider subscribing to the channel as well. Hopefully I will see you in my next investing episode. Catch you there.